Want to live in the most powerful country in the world? Well, there's a price for that. And guess what? You'll be the one paying. Every paycheck, every business deal, every dollar earned, Uncle Sam takes his cut. The US federal government collects over $4 trillion a year in taxes, more than the entire GDP of India, UK or France. It funds everything: Social Security, Medicare, the military, roads, schools, even paying off past debt. But here's the twist. After its independence in the late 1700s, America ran for over 100 years without a federal income tax. No IRS, no April 15 deadline, nothing. So how did America go from no income tax to the US federal government taking its share before your money even hits your bank account? Let's break it down. The United States of America comprises 50 states, each running their own game. They make their own laws, collect their own taxes, even license their own professionals, which is why a CPA in New York isn't automatically a CPA in California. This wasn't a mistake. The founding fathers designed it this way. Back in 1776, at the time of American independence,
The United States declared its independence on July 4, 1776, with the adoption of the Declaration of Independence by the Second Continental Congress.
the 13 British colonies became 13 states.
This document, primarily authored by Thomas Jefferson, announced the separation of the 13 American colonies from Great Britain, forming an independent nation.
While these states didn't want some central government calling the shots, they did need unity for the big things, like foreign relations and war.
All of a sudden you have this group of people who are going, no, we're not part of some great chain of being with the king at the top of it. We are free people. We can vote for who we want to have in charge. And we're not going to tolerate you telling us that we have some class status we have to be trapped in.
And that's why the president, the head of the federal government in the US, is also the commander-in-chief of the US military. But here's the catch. Having a federal government means having federal expenses, and that needs to be funded by Uncle Sam. Going back in history, America was literally founded on tax rebellion against the British. But after independence, the US government had no money. Solution? Tariffs and excise taxes. Tariffs, which are taxes on imported goods, funded almost everything. Excise taxes, which are taxes on things like whiskey, made up the rest. For decades, America kept running on tariffs. No income tax.
You can say there were three distinct periods of tariff history in the United States. It's from, say, 1790 to 1860, when tariffs were the main source of federal revenue. Something like 90% of all federal revenues was based on taxing imports. We had tariffs for protection.
But then war changed everything. When the Civil War erupted in the 1860s, tariffs weren't enough. The US needed money fast. So in 1862, Congress introduced the first federal income tax, just 3% on incomes above $600.
On the 5th of August 1861, the Revenue Act was signed into law by Abraham Lincoln, imposing US federal income tax for the first time.
And to collect it, they created the IRS, Internal Revenue Services.
In 1862, the United States was in big trouble. The Civil War was tearing the country apart, with families and states fighting against each other. The Union needed money, and fast, to pay for the war. That's where Abraham Lincoln came in. To help the Union get the money it needed, he made a big decision. He created something called the IRS, or the Internal Revenue Service. This was the start of the federal income tax.
But after the war, Congress repealed the tax and US was back to tariffs. But America was changing. The economy was industrializing, wealth was consolidating, and people started demanding tax reform. Of course, the federal government needed a new permanent way to fund itself. And in 1913, just before World War I, everything changed.
The year was 1913. Woodrow Wilson was president, and powerful banking interests, who had been trying for years, finally achieved their long-term goal of a silent coup d'etat by taking control of the American government. The bankers committed their second and by far the most diabolical fraud ever perpetrated on the American people by bribing senators to pass the Federal Reserve Act without the required constitutional amendment.
All in favor, say aye.
The 16th Amendment was ratified, giving the US federal government the power to tax income permanently.
The Federal Reserve was created by Congress in 1913, and it was entrusted with the power granted originally to the Congress by the US Constitution to coin money and regulate the value thereof.
The first tax? Just 1% on incomes above $3,000. Almost no one paid it. But then came war. Crisis. More war. During World War I, tax rates jumped to as high as 77%. And World War II? That changed everything. Before World War II, only 4 million Americans paid income tax. By 1945, 50 million did. The IRS introduced withholding tax. Now taxes were automatically deducted from paychecks, and income tax became the foundation of US government funding. Federal income tax isn't just a law, it's how the US government operates. Where does the money come from? Almost 50% from individual income taxes. About 35% from payroll taxes, which is Social Security and Medicare. About 7% from corporate income taxes, and the remaining from excise taxes, tariffs, estate taxes, and other sources. And where does it all go? To fund everything. To fund Social Security and Medicare, military spendings, infrastructure, education, science, law enforcement, food assistance, veterans benefits, foreign aid, and the US government keeps running deficit budgets, borrows a lot of money, and has to pay huge amounts of interest to service that national debt.
The national debt.
The national debt.
The national debt.
Here's a look at the running national debt clock in the US. As of this recording, it's just over $36 trillion.
Okay, now let's get back to taxes. Let's drill down and talk about how income tax is reported. For individuals, tax returns are filed on Form 1040, which includes wages, business income, capital gains, rental income, every source of income. And after deductions and credits, Form 1040 determines how much you owe to Uncle Sam. For corporations, tax returns are filed on Form 1120. C corporations pay a flat 21% corporate tax. But do remember that when these corporations pay out dividends to, let's say, individual shareholders, those individuals pay taxes on those dividends again on their Form 1040s. I know what you're thinking. That's double taxation. And that's why you also have flow-through entities like S corporations and partnerships who do not pay any corporate tax. S corporations do file Form 1120S and partnerships file Form 1065. But they're not paying taxes on these firms. Instead, their income flows through to the owners or partners who report it on their personal 1040s. And then there are LLCs, the wild card. Single member LLCs, they are taxed like a sole proprietorship on Form 1040. Multi-member LLCs, they can elect to be taxed as partnerships, S corps, or even C corps. It's complicated. And that's why America needs CPAs. And then there is another layer of complication. Federal income tax applies to everyone, but each state has its own rules for state taxes. So if you're a millionaire in New York, your federal tax rate is 38% plus, let's say, 10% state income tax, that's 48% in taxes. In California, it's even higher, 12% state income taxes, leading to about 50% that you have to pay in income taxes alone. Corporations face the same issue. The federal corporate tax rate is 21%, but states add their own taxes. And if a company operates in multiple states, it has to allocate its income and pay taxes proportionally in each state that it operates. And that's why CPAs exist, to make sense of it all. For over 100 years, taxation has shaped America. Funding wars, building cities, and keeping the lights on in Washington. Meanwhile, Trump is probably planning his next trade war. Musk may be busy drafting the Mars colony taxation plan.
How awesome it will be to have American astronauts plant the flag on another planet for the first time.
And Congress, they're still debating tax reform.
We're going to vote here real soon on a bill that's been worked on for many, many months.
Future, who knows? But one thing's certain, tax season isn't going anywhere.